Hi, and welcome to my market report. My name is Mike, and this market report is on mortgage rates. If you guys haven't seen my channel or any of my videos, we kind of do a daily video on what's driving mortgage rates on a daily basis, whether it might be something from the economic calendar, something from the headline news, or something geopolitical, or sometimes we'll get data that's out there that would be good news, but now investors seem that to be as bad news. So good news is now bad news, and vice versa. These happen sometimes in the markets, and if you're off on the sidelines, you may not know what's going on or understand it. So we're here to kind of explain these items here for you, so that way you can better follow what's driving mortgage rates. If you're in the real estate industry, this could be a great series of videos for you to kind of watch and see what's going on with the markets. If you're a consumer looking to refinance or purchase, you might want to know what's going on with rates and see when's a good time to lock in. Hopefully, these videos will provide you that information so you can make an informed decision for yourself. A little bit about myself is I'm a loan officer. I do work with a national lender, so I'm here to answer any questions you might have, whether it might be about mortgage rates or different programs available out there or the process, what have you. Please feel free to reach out here. We're here to help you guys out. We can certainly help you guys out with running numbers and see if it might make sense for a refinance or make suggestions. We can also help you get set up and get pre-approved to buy that next property. We work with all types of buyers out there, from investors to high-end buyers to that of first-time home buyers, and people are moving up and down. We're here to help you guys out. So without further ado, we'll start off with the economic data for today. Uh, One little unlooked one we look at is every Wednesday we get this uh, mortgage loan activity report from the MBA, and I just kind of usually like to kind of glance at, let me know if things are up or down. So as we can see here, purchase side are up a little bit. However, MBA now it's that the refinances did drop a little bit, mortgage loan applications, and that was because we had a slight uptick the other week in terms of mortgage rates. Now, the big one this week is the retail sales for the month of November. So back in October, it was revised from 1.7 to 1.8% month over month. However, forecasters count for 0.8%, and it only came in at a bit dismal 0.3%. So obviously not very good numbers right there. Now we got the Empire State Index right here for the month of December. This is the manufacturing for the New York region, and we're at 30.9, and back in October or November, and forecast count for it dipped down to 25 and actually increased to 31.9. This is extremely good because anything above zero is considered expansion, and this is moving quite in the right direction and very high levels right now. Now we also got the home builder index, NAHB housing home builder index, and this is also doing quite well here. So we had 83 back in November. Forecasts remain unchanged, and it actually went up slightly, 1 point to 84. So home builders are obviously feeling a little bit more confident about where things are going in terms of building homes, and of course the supply and demand out there. And the good thing about these is not so much multi-family homes. These guys are looking increase in their levels of single-family homes, which is good for home buyers out there. And then we also got the business inventories for the month of October. Uh, Back in September, so was revised from zero point 0.7 to zero point 0.8. Forecast has come from 1.1, and it came slightly higher at 1.2%. Now, last but not least, this is the big thing that we were talking about. All investors have been waiting for, and we just kind of got the announcement a few minutes ago. And so you'll see here we have the FOMC rate decision. So they gave their announcement. So if you recall, if you've been watching my videos, the FOMC started their two-day meeting starting yesterday, and then today they give their decision. And ahead of all this was the Fed. Fed had already given indications that there are going to be some policy changes. There's been speculations. A lot of the speculations are coming in correct. So, of course, we didn't expect them to raise any rates currently, but they did announce that they're going to go ahead and double up on their tapering starting in mid-January. So hopefully finish right around March timeframe on their purchases of the mortgage-backed securities as well as treasuries. So that means there'll be less demand for those. So stay tuned on that. And then shortly after, the dot plot came out that they do expect 3 rate hikes in 22 and 3 in 23. So that means these will be in quarter increments. So probably by end of the year, should be up about 0.75 and 1.5 by end of 23 to try. And why do they do that? Is because inflation's been pretty bad, as we can all tell. going to the grocery store, gasoline, anything we look to buy, things are jacked up in terms of pricing. So this is supposed to help stave off inflation, slow things down a little bit, and hopefully get things at raise higher costs. So therefore, inflation will kind of simmer down a little bit here in there. So that was the big takeaway of today's meeting, FOMC's meeting, and what their announcements were. Should hopefully help us out going forward. The bond, we'll go look at the bond here. Initial reaction was pretty negative. There was a big sell-off here. We were down about 9 to 14 basis points, and then quickly dropped down about 30 some basis points. Now you can see it's kind of moving back and forth from 31 to 23, 25. So it's been kind of going back and forth here. It's pretty volatile right now, and they're trying to find their way as to which way they're going to move in terms of where they're going to go. So right now, it's a very uncertain time of what they're going to do in terms of mortgage-backed securities. So stocks are kind of mixed territory. I believe Nasdaq is the only one in negative territory right now. They were in negative prior to the meeting, but what we've been getting is if stocks have been in negative territory, we've been kind of rebounding and getting better pricing as a result of that. So money's been flowing from stocks and equities into the bond market. They've kind of priced that more or less in the market. So today could be more emotional, and tomorrow we could get a little bit better results as to what may where they're actually going to go in this pricing. So here's a look at. So we'll take a look at what it looks like, so you can see as soon as the announcement happened, it just dropped dramatically. So we've been kind of pretty steady along here for the most part, even declined a little bit from, like I said, about 9 basis points on about 14. And then we just had this huge drop here, and we're kind of in this range right now, as you can see here over the last few moments here. Now, same thing with the yields. Yields are kind of working their way upwards. We're about 1.47 right now, after being right around 1.44 range. But for the most part, yields have been kind of hanging in there. That's been the positive news. It looks like it's trying to get above this technical level, but it's kind of holding a cap. We'll see if it can maintain that or not going forward here. Last but not least, let's check out the national average for conforming loan limits. 15 years at 2.52 and the 30 years at 3.16. These do have points built into it. If you're not familiar with how rates work, they do got a lot of variables that go into it. There's no one size fits all. And rates are different for each loan program. So FHA is going to be different from conforming, and conforming is going to be different from jumbo, and a lot of these are going to be a lot different in terms of pricing. But also we got FICO's an important piece. So we got amount of equity in the property if you're refinancing, or amount of down payment if you're buying. That's also a factor, as well as if a type of property from a single family to condo townhouses to multi-units. There's different price variables on those, as well as if it's a investment property or primary residence or second home. All these have they look at the whole thing rather than just one or two variables. They look at all the variables together to determine what your pricing is, and that's why for the most part you're not going to see apples to apples when you're talking to your friends or colleagues or family members about rates out there. Now they may be a little similar, but they might not be exact due to a lot of different variables that are placed. And plus, as you can see here, if you're following, rates can change dramatically. So we've had price, as you can see here, people since that announcement. This went worse. The RD lenders are coming with worse pricing into rate sheets, worse pricing. So we could get multiple changes when it's real volatile in terms of mortgage rates. All right, folks, I hope this helps out. I hope you guys have a great rest of your day. This is pretty much the wrap. If you guys like these videos, please smash that like button and help out our channel out. We greatly appreciate that. We appreciate you guys viewing it. If you guys got questions about anything, please, again, reach out. We're here. Just reach us through the social media site you found us, and we'll be sure to answer what questions you guys may have or help you out however you guys like. Have a great rest of your day. Thanks for watching. See you tomorrow's video. Bye-bye.